All right, guys. Welcome to another episode of Lex Stock Trading by Dominion FX, founder of Dominion Forex Academy, where we raise and train forex to become profitable and professional traders. And in this episode of Lex Stock Trading, we'll be talking about technical analysis, easy and simple. Yeah, I know a lot of people want to learn about the whole technical analysis stocks, uptrend, downtrend, and stuff. The good thing about it is that technical analysis is kind of becoming outdated, but for those who are new into the financial market, and to those who are experienced, I want to see this. No matter the strategy you are using, even if you are using advanced trading technique or algorithms, technical analysis cannot be outdated because it remains the fundamentals of price action trading. And if you must be profitable, you must understand what technical analysis is all about. And I'm not just going to talk about technical analysis in this video. I'll be breaking it down to a simple format that makes it easy to learn and understand. So, guys, let's get into this video quickly. So, now, what is technical analysis per se? What is technical analysis? Now, technical analysis is a method of evaluating market prices by analyzing statistical patterns and trends in their price movement and other market related data, such as trading volumes and open interest. Note that it is a method of evaluating the market. It's with using statistical patterns, in the sense that when you observe how the market moves over time, it creates some kind of patterns. Yes, those who are um experience when it comes to price action trading, we have what they call chart patterns. We have what, and I think in the last video we looked at some kind of, we looked at the engulfed candle. So the engulfed candle is a kind of a pattern that the market creates. We talked about you see where we talked about trends and stuff like that. These are patterns that the market um creates over time. So critical analysis is a method of evaluating these market prices, these patterns that occur in market prices over time, in a bid to what, find our entry, find our exits, and make money from trading. Now, what are the forms of technical analysis? Now, there are two forms. Yeah, trying to break down technical analysis. Now, I'll be telling you guys that there are two forms of technical analysis, and number one is the trends. Yeah, number one here is the trends, and we have the support and resistance level, which is known as pivot points. Okay, and now, what is forex trends? Now, initially, many of us have been hearing about uptrend, downtrend. Now, I want to break this trend into an understandable means, because if trends is explained in a very easy way, it makes trading more easy, because they always say something, make the trend your friend, right? Yes. If market is moving upward, moving bullish, it's moving in a trending direction. If market is consolidating, it's consolidating in a trending direction. If market is going downward, depreciating, yeah, downtrend, is going it's still trending in that direction. So everything that hovers around the market initially is trends, whether upward, downward, or sideways. The price is trending. So now, a trend refers to what, the direction or momentum of a market asset's price movement over a specific period. Now, irrespective of the time frame that you are using, be the daily, the weekly, the 4 hour, the 15 minutes, the market is always trending. It is what? It is always trending. This is one thing that I want every trader to take note of, right? So trend refers to what? When I say downtrend, when I say uptrend, it refers to what, the direction or momentum of a market. If even USD is trending, it is on a momentum in that direction. If it's moving upward, it is trending in that direction. If it's moving downward, it is what, trending in that direction. So now there are three types of what, forex trend. We have the uptrend, which is known as the bullish. We have the downtrend, which is known as the bearish, and we have the sideways movement. Yeah, the uptrend, downtrend, and the what? The sideways movement, which is known as the market range, when price is beginning to range between specific or yeah in between a specific support and resistance level. Yeah, as I talked called here, pivot points, or price is just testing moving 30 pips up, 30 pips down, 50 pips up, 50 pips down. So that's what a sideways movement. Now, why forex trends? I don't just come online and teach people, okay, let's do this, let's do that. In our last video, you have understood why I highlighted engulfed candle as one of the most effective and efficient candlestick pattern. So now, why is forex trend so important? One, it helps you to what identify potential trading opportunities. I don't guys get the idea. It what helps you to what identify potential trading opportunities. That means if you're looking into if you're looking into going long on a commodity, a stock, or probably trading the forex market, are looking for a currency to go long or short, identifying the trend helps you to what find your trading opportunities. And also too, when you understand the trend of the market, it helps you to what set your stop loss and take profit levels, so that you're not just buying anyhow or selling anyhow. That means you're not just entering the market and exiting anyhow. There are a lot of people that just come to the market and say, okay, I'm seeing a very green candle or a bullish candle, and I just buy. Many traders don't even use stop loss levels or take profit level. Just trade aggressively and emotionally. But then when you understand the trend of the market, it helps you to find your entry and exit. And it doesn't just help you find your entry and exit. It also gives you reasons why you are entering that trade and exiting from that trade. And number three, why forex trends? It helps you to what manage your risks, because if you know that this market is trending, it allows you to know what you'll be risking on that trade. And also it helps you to what to evaluate the strength of a market or asset. If EURUSD is moving long, knowing the trend or the trend itself helps you to know the strength of the market. Is it bullish strong or bearish strong? And also understand the knowledge of trend makes helps you to what make informed investment decisions. Like I said earlier, if you are not buying and selling anyhow, I don't know if you guys get, you're not buying and selling anyhow. It helps you what make informed investment decisions, in the sense that you know why you are entering this trade, you know why you are exiting this trade, you know why you are going long, you know why you are going short, you know why you decided to go to buy Euro USD at that particular moment. So it what helps you to what make informed investment decisions when it comes to trading. Now let's look into uptrending markets. Yes. Now an uptrend is when the market prices are what making series of what higher highs and higher lows in an upward direction. As you can see, your price is moving up, HH, HL, HH, HL, HH, HL. That is price making series of higher high, higher low, higher high, higher low, higher high, higher low, and boom, higher high. So the uptrend market direction indicates that buyers are what taking control of the market. When you see price making series of higher highs and higher lows like this, it means that buyers are what invading the market at that particular moment. And what traders are what expected to look out for buying opportunities. As a wise trader, you are meant to trade in the direction of the trend. Like I said, the trend is your friend. It helps to what make wise market um investment decisions. So if I'm looking at this trade per se, the prices are making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, I should be looking out for buying opportunities in the market. I should be looking out for buying opportunities in the market, because what price is moving in an uptrend direction. Now, what are the characteristics of up and uptrending market? What are the characteristics of an uptrending market? When price is making higher highs and higher lows, why does it make higher highs and higher lows? What are the unique thing about these highs and lows? Now, is what impulse. Price moves in an impulse direction, in an impulsive direction, or in an impulse direction to form what a higher high. Price moves what in an impulse what direction to form higher to form a higher high. And number two, price retrace or there is a retracement to form a lower low. That means there's an impulse, there's a retracement, there's an impulse, there's a retracement, an impulse, and what a retracement. So here are the what characteristics of an uptrending bullish market. Now, this is an impulse to make a higher high. That means price is moving in an aggressive momentum, like I will say, to what create a high, and what in that direction it is now what retracing to a what a low for the next high or what to break the previous high. So we have the impulse, we have the retracement, we have the impulse, we have the retracement, we have the impulse, we have the retracement, and we have the impulse. So now, what is an impulse? An impulse is a decisive move by the market or market makers. Market makers are people that are involved in moving the forex market. We have the big banks, the big players, the investors, and stuff like that. There are people who what make the market move, all right, to what take the price from a lower region to a higher region. So now this is a lower region, a higher low, and what market makers pushes it aggressively to what make a new high, breaking the previous high. That is, this high here is breaking this high is breaking this high, and this high is breaking its high. Another characteristics of an uptrending market is that the lower low will fail to break the previous low. As you can see, this low failed to break this low, and this low failed to break this low. So whenever I'm looking at an uptrending market, I'm looking out for prices that breaks previous high and prices that fails to break the previous low. So that is an impulse and a retracement. Now, what is a retracement? A retracement is a decisive movement by the market makers to take market prices from a higher region, boom, up here. You can see the high region right here. To take market from what a higher region to a sustainable and affordable lower region. Now, you don't just buy and sell anyhow when it comes to trading the trend. You must, I did tell my traders that the easiest way to make money is by buying low and selling high. That's why I use the word from a higher region to what a sustainable, yeah, a sustainable and what affordable lower region, in anticipation for what, for a continuation in the normal direction of the market trend. Same thing goes for downtrend also. So what this is how the impulse and retracement works. Price moves up in an impulsive way, and price what retrace downward to a what is sustainable and affordable level, because everybody, even the big banks, are looking for a safe investment. So before buyers will come in on an uptrending market, it must have hit a sustainable and affordable level before what price begins to move in an impulsive way. So if I want to go in this uptrending market, I'll be looking out for what a sustainable and affordable lower region in my chart. When we get to the chart, you see an easy example there in the chart before what I buy. So you don't just buy anyhow. You don't just buy because you feel that there's a green candle, there's a bullish candle, and the candle is looking so good, and you want to go in. No, you buy or you trade in the direction of the trend, and in respect to the levels that are affordable by the traders. Now there's an example of an uptrending bullish market. As you can see that price. Now I'm going to take this very 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 so that you guys can grab the whole concept. I believe that I will have to do a video before this Let's Talk Trading to summarize to what creating a perfect strategy for you guys, especially the newbies, those of you that are new into trading. I will teach you guys how you can combine engulfing candle with trading the trend, because as you can see, this is an engulfing candle. So once you've outlined that price is what's trending upward, your job is to look for your entries, and you can get those entries with an engulfed candle. So I can go in at this engulfed candle over here, That if you watch the last video of Let's Talk Trading, day one, episode one, you will see that we talked about an engulfed candle, the characteristics of an engulfed candle, and how to trade it effectively. So that is that. So now price is what moving what upward. This is an impulsive movement in the market. This is what an impulsive move up, a retracement. Now see that price retraced to what, a sustainable and affordable level, and what price now moved aggressively. You can see that the way the price pushed upward and uptrending market is very, very straightforward, unlike the downtrending one. So unlike the retracement, so see how price moves. This is an aggressive movement by the market upward. Then what, a retracement came in again. So an affordable and sustainable level by the markets, for the market makers to what, come in, and what, see how price now moved upward. Let's ignore this and this, and price moved upward. Boom. So this is how an uptrending market looks like. If you're looking at your chart and you want to identify um you want to identify what is it called, you want to identify an uptrending market. What this specifically is just, once you outline your trend, you are seeing that price is moving upward. You just take your, go come to trading view. In trading view, you just go to your tools, and you what, connect the lows. Connect the lows like this. Make sure each lows are connected. Boom. Or you can come here and you can do something like this. So this is how you identify. So what do you want to do? You want to trade in this direction of the impulse, the retracement, impulse, what, retracement, impulse, yeah, retracement, and stuff like that. So that is how you want to do. You want to trade in that direction, because if price is moving in an impulsive way, making a retracement, making an impulse, making a retracement, impulse, retracement. Now, in respect to the time frame, your duty is just to draw a line connecting each lows together. Remember, one of the characteristics of an uptrending market is that price will do what? That what, price will what, fail to what, break the previous low. Price will what, fail to what, break the previous low. Price will what, fail to break the previous low. The previous low are always being protected when it comes to what, trading in an uptrend, and price what, tends to what, break the previous high, making new highs, So these are the characteristics of an uptrending market. So in this beautiful sense, I want to look for buying opportunities around here to go enter the market. I want to look for what, buying opportunities to enter the market around this lows here. I want to look for what, buying opportunities to enter this market around this level. So target what, the next high, the next high, and the next high. So now, and if you watch the last video, how do I find all these entries? We talked about engulfing candle, and this is an example of an engulfing candle right here. Let me just brush through what we did in our last topic, in our last video. Please go back to that video. This is an example of an engulfing candle. So if I see a candle that is engulfed like this, don't mind my drawing. Yeah, engulfed like this is a very bullish candle. Very bullish candle. Yeah, and this is a very, very, very bearish candle. Don't mind my drawing. Now, this is engulfed at this level. Price is what, engulfed at this level. This is the candle that has been engulfed. The green one is the engulfing candle like this. So now I want to find my entry at this level over here. Once this candle closes, I want to find my entry here, and I want to put my what, stop loss around the low of this candle. If there's a wick, probably if there's a wick in this candle now, like this, there's a wick in this candle. If there's a wick in this candle, let's do that. If there is a wick in this candle, now I will want to find put my stop loss around here. Okay, targeting the what? So I'm going to spot this somewhere around this low, and I want to target the next high. Boom, target the next high. All right, because it's turning upward. So I can say probably if I'm using a good risk reward ratio and the chart is very good, this could probably be minus 30 pips stop loss, probably towards target. It's a 4H strategy, so probably 100 pips plus. Sometimes depending on how the candles are, it could be like 50 to 70 pips. But then that's good. That's good. So if we come back to the chart, you can see from here, this is an engulfing candle over here. If you look clear, this is an engulfing candle right here. Let me mark that this is an engulfing candle over here. So this is the high, right, that made this low. I'm not moving in between this market, in between, but I'm looking at overall. This is a low, high, low, high, low, high, low. This is where the trend started from. So targeting the major trend, you can see that if I decide to enter at this what level where this market closed here, targeting the way up like this, and my stop loss is around here. So come on now, look at it. This is a very good risk to reward ratio. So that is that. So now moving on to the next video, I mean the next topic now is downtrend. Now what's a downtrending market? Now a downtrending market is when market prices are making series of what lower lows. Sorry, I'm making series of lower highs and what lower lows. Yeah, price is working making series of lower lows and lower high. Yeah, I'm correct. Lower lows and lower high, not lower highs and lower lows. Price are making series of lower lows. See price, it's what made a lower low, and the lower low push backward, retracement to a lower high, a lower low, a lower high, a lower low, a lower high, and what a lower low. So the downtrend market direction indicates that sellers are taking control of the market, and what traders are what expected to look out for selling opportunities. That means I want to look out for what selling opportunities around areas as such. Look out for selling opportunities around areas as such. Probably this is an area for me to sell in, an area for me to what sell in, an area for me to what selling. So I'm look at what selling opportunities around this area to what to sell, to what sell, to what sell. So how to sell, and like I explained in selling, I'm targeting the what nearest what low, nearest low. So I take profit to be around this area. So this is how you should now. What are the characteristics of a downtrending market? An impulse, what these are impulsive movements. An impulse to what form a lower low, an impulse to form a lower low, an impulse to form a lower low, and an impulse to form a what a lower low. And price now does what? It now what retraces to form a what a high for a selling opportunities. It retraces to what to form a lower high, sorry, for a selling opportunity. Retraces again to sell to selling. That's to remember is the affordable, sorry, the sustainable and affordable area. Yeah. So to sell from this area. So this is how what the downtrending market what works initially. Works initially. So let's get down to the characteristics, right, of how downtrending market looks like. This is how the downtrending market looks like. This is what an impulsive move to make a what lower low, as I said earlier. Then what the retracement, an impulsive move, retracement, impulsive move, retracement, impulsive move. Like I said, your duty as a trader is what bring your line in when you get the trading. If you just put a line around this and make sure that the prices are retracing, moving downward, retracing, you spot what an engulfed candle, and boom, you enter your trade with good risk reward ratio. When I say risk reward ratio, you are losing an affordable amount of money. That means you are losing a particular amount of money that you can afford to lose, and you're setting up your TP. I do tell people is that you can determine how much you make trading based on the based on the satisfaction of your bid level, and you can still determine how much you lose in trading based on the satisfaction of what you can afford to lose. So if I'm explaining risk reward ratio, I'm telling people that risk reward ratio is how much am I willing to lose on a trade, and how much am I willing to make from that trade. Because technically, if I'm risking 20 pips to make 60 pips, depending on my lot size. Well, we'll get to that area in another video. I've received a lot of questioning from traders on about risk management. In a video, I will explain what how risk management works. I'm going to break it down to the simplest format, or to the simplest way possible, so that you guys can grab the whole concept of risk management. So let's get back to the video now. What you should take note on about impulse and retracement. Now, what are the things to take note of about impulse and retracement? No, when prices are impulse, when prices moving in an impulsive way, upward or downward. So what are the things to take note of? Now, a strong price movement. So an impulse is a strong price movement in the direction of the trend. If we check the last chart I showed you guys, that's a very strong movement. Boom, is even more stronger than the retracement. See, so the impulsive movement is always stronger. See this downtrending here. Boom, boom. So you guys can see the dip. First price now switch to bullish, and that's making higher highs and higher low. So you can see what impulsive movement in the market. Now, an impulse is a significant and rapid change in price, often driven by high volume and market sentiment. So it is that high volume and market sentiment that makes the movement very strong, as you can see. So that high volume and sentiment is what makes it strong price movement. So now, an impulse typically occurs in the direction of the underlying trend. It's always it always occur. You always see a very strong impulsive move in the direction, because of that is where the much bidding is. That's where the high volume is. I do tell people, if you want to trade profitably, trade trade where there's volume, trade where there's liquidity. Advanced trading technique will call it those levels liquidity. But for this level, for this level of trading technical analysis, I would say volume of traders. So look for where volumes are in the market and trade in those areas. Trade in the direction of the volume. And impulse can be seen as impulsive wave on a chart. Boom, this is a wave. So wave on the chart. Now, what is a retracement? A quick one. A retracement is a price movement against the direction of the trend. Boom, it's going to price is what retracing to it is sustainable and affordable price level for what sellers to come in. I think I explained that price is what always retracing to a what is sustainable and what affordable level for what sellers or buyers to come in. Now, um, a retracement is a partial reversal of the previous impulsive move. It's an impulsive move, then if you take it, it's kind of it moves half of it, a partial, not always fully. So price what boom, retrace to this level and dipped, retrace to a partial way level and dipped again. So now it's also a correction that retraces a portion of the previous impulsive move. It's price is they will always say something that in the forex market, price is not moving all down, like something like this. Now they'll tell you that in the forex market, price is not moving all down, and price is not moving all up like this. or probably if we want to go sideways, and that's like no, price is moving in up direction. So getting impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement, and like that, and like that. And you can see this is an uptrending what market. So this is how what market moves initially, making what impulsive movement, creating new highs in an uptrending market, and that's for the market. So an impulse typically occurs in a counter trend. So it is going against the exact trend. This is a downtrending market, right? So an impulsive move is and a retracement is what going against the exact what market movements, always going against it. It's like it's countering the exact direction of the market to a what a sustainable and affordable level that's correcting to that price can dip. So there's what they call retracement levels. I'm not going to go into that, but another video, I will show you guys how you can use retracement level to identify your retracement and stuff like that. So we have retracement levels such as 23.6%, 28 point. That's if you want to spot your sustainable and affordable level. But I come back to the chart now. Let's take a brief look on the chart. That price dips to a particular level, always moving to a particular level. Now, how do I know this the sustainable and what affordable level moved by the market? This 23.6 and some all the way to 76.4 now are commonly used to measure the extent of the retracement. Now, these levels are based on Fibonacci ratios and are used to predict the extent of the retracement. So if you want to know how well or how far the market will retrace to, there's what they call retracement levels, which is measured now. There's what they call retracement levels, which is measured by a tool called Fibonacci. So in this video, I won't go into that aspect of trading. Now, next video probably will look into it. So now this is how a downtrending market looks like. We can see how prices what move to what a sustainable and affordable what level. You can see it right here also. 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 Before now, price is here to what? Because this is what a downtrending movement. You can pass the trend all the way down. You can see. So this is what a downtrending movement. So can we move further? I believe that you guys grab the concept of it, characteristics of trading and that and that. So now moving all the way to sideways markets. When you start trading, probably you might have heard a lot of traders say avoid the range, avoid sideways. If price is consolidating, don't trade it. Yeah, I will say that also. If you know Sabi, you know Sabi. Yeah, this is where scalpers come in. This is where scalpers come in. So if you know Sabi, you know Sabi. So leave the range to the experienced traders. All right. If you want to learn how to trade the range, you have to learn how to trade range. Or if you want to trade the range service, you have to learn how to trade range. If you want to be profitable in your scalping of sideways movements, you have to learn it. So now, what is sideways movement? Sideways movement, also known as consolidation or neutral trend, also known as a range market, occurs when a market or asset price trades within a narrow range without a clear upward and downward movement. In I didn't state earlier that one of the characteristics of trading of technical analysis, if we get to market structure, is that in the market prices move in an upward direction. Yeah, towards trade price moves in a upward, downward, and sideways. In a sense, okay, maybe probably if I'm doing another video, I will break down this concept of trading. But I don't want to expand the video. I want to minimize it to probably maybe a 30-minute video or so. But let's see how it goes. Probably 30 to 45 we are done with this. So I don't want to go into this, but in another video, probably when I'm taking market structure, I'll explain the whole concept of this whole movement in the market. So that is that for that. So now, characteristics of sideways movement, or which is also known as market range, is that price trades within a narrow range. As you can see, a narrow what range, a narrow range. There's no clear trend that direction. This is not an upward movement. It's not a downward movement. So price is just what's moving sideways. Now, support and resistance level are close to together. Yes, when we get to support and resistance, we learn what support and resistance level is. This is a what is resistance level. This is a what is support level. So support and resistance level is what creates sideways movement. So now trading volume may be lower than usual. There's no impulsive move in this movement, and if there's no impulsive move, there's no strong movement. So there's no retracement move. There's no sustainable and affordable price level to trade with. So price is just what negating around this. This could be 50 pips up, 50 pips down, 50 pips up, 50 pips down. So 50-50. So market sentiment is neutral or mixed. What is your bias on the market? Some will say it's bullish, some will say it's bearish, some will say I'm waiting for a breakout, and that like that. So that this aspect will take us to the next phase of the market, because how can you now know the direction of the market if it is neutral? So now, as you can see, sideways movement can be challenging for traders, as it can be difficult to determine the next price movement. This is what the sideways movement. As you can see, price is on a downtrending level, making an impulse, a retracement, an impulse, a retracement, an impulse, a retracement, an impulse, and that impulse it began to consolidate. Began to consolidate in a resistance and support level area. So what do we do when price begins to do stuff like this? This is now where we'll talk about how to trade sideways markets. Because if price is moving like this, how can I trade this? Then how can I know if price will continue the trend from here, or price will break up and start going bullish? So how do I know? Now, one, you trade sideways markets by trading breakouts. I trade sideways markets by trading within the range, support, and resistance level. You trade sideways market by trading within the range, and within the range is in between support and what resistance level. And also you trade sideways markets, yeah, by support and resistance level also, and that's that. So now, how do we trade breakouts? First, what is breakout? Now, trading breakout from a ranging market involves identifying the range first, waiting for a breakout, and then trading in the direction of the breakout. When they say breakout, it's like a burst out of the trend. Price does, if price is moving like this, down, up, down, up, down, up, down. So there's a burst in the market, and price now switch. So this is what the resistance level, and this is what my support level. So price was neutral before, and there was a breakout. That breakout now forms a retracement, and yeah, like this, and it starts trending upward. So that is how breakout works. So now, characteristics of sideways market. One of the things you need to know about sideways market: if price wants to break out for you to enter, price is first of all, if you can look at from this area, price was first trending. Probably this price is moving something like this, yeah, and boom, it now entered a range. This is a resistance level, this is a what support level. Price is what's ranging in between this level. As you can see, it's just moving in between. There was a fake out, and yeah, a fake out is all the opposite of a breakout, where price tends to bust out, then go back in, and it now begins to continue. So this now becomes our breakout area, right? So from the support level to the breakout area, we find I'll find our retracement level, and boom, price now continue the direction. If we go into price action trading, you hear what they call AMP, whereby we have our accumulation at this level, have our manipulation at this level, and have our distribution. But I'm not going to go into it. We're talking about price action trading. But then this is how it all looks like. This is how it looks like. So price is ranging in between resistance levels. So if I want to trade in between these levels, I want to look for buys around here and sells around here. Sells by sells probably here. My stop loss should be above here. TP should be on this line. Entry is here. Stop loss is here. So that is how you trade. You just have to use proper risk management to what trade this effectively. So that is that. So what are the characteristics of what are the characteristics of what are the characteristics of sideways markets or market range? Is what support and resistance level. Price is what trading in between those levels. There is, or there might not be, a fake out, but there's always a breakout and retracement. Fake out doesn't occur all the time, but breakout, price must break out and retrace. Let's see that in one of our charts. But before we go into the chart, how do we now trade the support and resistance level? Because of if price must range, it must range in between support and resistance level. If price must range, it must range in between support and resistance level. So how do I now identify the support and resistance level? Now, support and resistance levels are key concepts in technical analysis. Now, I will create a specific video for support and resistance level again, because so that you guys will understand the whole thing. That's why I'm breaking down this stuff. So now, support and resistance level are key concepts. What are the key concepts? Because uptrend, downtrend, sideways hovers around support and resistance level. Support and resistance level is like the basic market structure. It's how price moves. Price must hit a resistance before it sells, and price must bounce off the support level to buy. So there are key concepts in technical analysis used to identify potential price levels where a currency price may bounce back or break through. Now, what are support levels? Support levels are level where the price of a security, currency, commodity, crypto price has difficulty breaking below. As you can see, if you what break this area, that's what difficulty breaking was below. A level where buyers are likely to enter the market, driving prices back off. This is a level, so you can see prices are what bouncing back off. So buyers are entering on that area. And what support levels are also area of demand where the price is more likely to bounce back. I will do a video on supply and demand so you guys can get the whole theory around it. So that is that. I'll just tell you guys, come and register for mentorship. Okay, yeah, I'll be launching our classes very soon, where there'll be pre-recorded session of each level of classes, so that it will help make mentorship and teaching easier. So whatever level you want to, whether the beginners, intermediate, advanced, it is available. If you have my WhatsApp number, you can check. The link is somewhere around the description of the channel. You can check my catalog and see what is available over there. So now, what are resistance level? A resistance level is where the price of a security has difficulty breaking above. Price what fails to break this up level around there. And also, a resistance level is where sellers are likely to enter the market or driving prices back down. So as you can see, price is what is where sellers came in and boom, prices are what driving back down. Now, resistance level are area of supply where the price is more likely to bounce back. These are what supply area. When I say supply area, there are areas where prices are, this is supply area. Prices are likely to bounce back of supply area. And in the lower time frame, there was a supply area that these prices react to, coming back up to this supply area right here, and boom, you can see. So even when it comes to trend, your retracement in a downtrend is always retracing towards a supply level. So we'll get to that area in a special video. I'll do that for you guys. Probably if I don't do that, you guys will have to come in and register all the way at men in for mentorship and that. So now, what are fake out and breakouts? Remember, I talked about this. I'm trying to break down these characteristics of a sideways movement. Remember, we have the support, resistance, fake out, and breakout. You have to understand, yeah, we have the support, resistance, fake out, breakout, and retracement level, because price will consolidate around support and resistance level. Sometimes price will fake out to take out, pending orders of retail traders. Then price will now break out of the range and retrace to what a sustainable and affordable level to continue the direction or change direction of or trade in the direction of the breakout. For instance, let me go back to that so we can see price is what trading in between support and resistance level, right? There was a fake out to take out what pending orders of brokers. Remember, probably people are selling off here, and then some people now decide to sell off here to price take out the sellers. And note, before a breakout, there's most likely to be a fake out. So the moment you spot a fake out in a trend, start expecting a breakout. That this is one of the confluence or key factor of knowing when price is about to break. Before a breakout, there is always a fake out. So this is a fake out here, and price now breaks out. Now price now retraces. So these are the key characteristics of what a sideways market. I believe you guys are understanding this thing. I'm trying to make this thing simple for you guys to understand. So this is what support and resistance level. Price will range in that direction. The most likely there might be a fake out to take out what pending orders of retail traders. Now, before a breakout, how do you know that price is about to break out? Once you spot a fake out in the market, there must be a breakout. The next thing you see is a breakout. Once you spot that breakout, look for your retracement and then trade in that direction. So now, a fake out, also known as false breakout, is a move that penetrates a support or resistance level only to reverse and continue the original trend. So I won't go deep into that. You can just use that past video. Now, fake out is a deceptive move that fakes out traders. It will take you out, leading them to enter a trade based on false signals and thereabouts. Now, fake out often occur on low trading volume or without sufficient market momentum. When there's no momentum in the market, price tends to be anyhow. So now, what is a breakout? A breakout is a genuine price movement that breaks through a established support and resistance level, accompanied by increased volume and market momentum. Let me come back here. As I when there's a breakout, it now releases the pressure. Yeah. So once pressure is being released, volume is being increased. So pressure is being released from the breakout, price retrace and start continuing the downtrend. So now an impulsive move downward and a retracement and another impulsive move. So I don't know if you guys all get it now. So breakout is a significant event that indicates a potential change in trend or a continuation of the existing trend. And what a breakout can lead to a substantial price move in the direction of the breakout. So then what are retracement levels? These are levels to which a price retraces or returns after a significant move, often used predict potential areas of support or resistance level. I'll create a video specifically explaining what I just said now. That video will be tagged support and resistance level pivot points. So that is that. But don't know that retracement levels are levels to which a price retraces to. As you can see, oh no, let's go back over here. Let's see. As you can see in this video, trading within the range, as you can see, support and resistance level. So if it, there's always what this is a what. Okay, I think I will not say it here. Let's continue. Probably in the next in a video when I'm talking about support and resistance level, you will know why retracement levels are retracement levels predict potential areas of support and resistance. So I'll keep that to for another video. I won't say everything in one video. Now, case study. Let's do some case study on this. Now, this is an uptrending movement with Euro USD. Price is what is moving in an uptrending direction, right? That's a price moving upward. So price now bump into what a support and resistance level. It is a fake out. Price faked out, and as you can notice, there's a breakout. So before that breakout, there's what a retracement. So your duty is after spotting a breakout to wait for that retracement. It might take quite some time, but it's very promising. Once you enter the impulsive move. So case study, that was moving up trending markets on its own. Price decided to what range in between that, and price faked out, taking out all retail traders that were selling off from here, and price now decided to what dip. This is even an engulfing candle. If you have spot this engulfing candle, you have entered here and probably target the next low, which is somewhere here, and boom, you spot your breakout, wait for the retracement, another engulfing candle over here, enter here, stop loss around here, target the next low. So this is very easy. Forex is very easy. I don't know if you guys get the whole concept. It's very easy. If you have a good mentor, you have a very good teacher. Forex is very easy. So let's do another case study with BTC USD. You can see price was what? I don't really like trading Bitcoin that much. I like trading Bitcoin that much, but then let's just look at it. So you can see price is what is at a resistance, at support, and there is a fake out. Yeah, okay, yeah. Now started ranging on a lower time frame above, but technically this would have been a fake out. And after the fake out, there was a breakout. This is an engulfing candle over here. So I have entered my stop loss, target this low, boom. Spot the fake out, then boom, enter here, enter after this engulfing candle, put my stop loss here and target the what next low, plus boom, and that is a very good. Remember it is very long. Remember I said that if the engulfing candle, if you watch the last video, is very long, something like this is long. What do? You spot your take your tip your this is 50, right? Let's say this is 50 pips. Your TP must be what? 50 pips also. So your entry, this is 50 pips stop loss, 50 pips stop loss. Then you have to spot another one again, finding another entry again. So probably the price that we trace like this, keep on going down. We do not know. So that is that. I'm trying to break down the whole survey for you guys, so you guys can see, learn, and be able to work chop from the markets. Yes, the main essence of trading is to make money. Yes, one of the main essence of trading is to what make money. So that is that. So case study Aussie dollar. Oh my god, this guy. So this guy's currently now. This guy is giving me joy because Aussie dollar. I did a swing setup on Aussie dollar, and then it gave me a wonderful. Because it played out absolutely well. So Aussie dollar, cheers to you. But then let's just study the case. This is what an uptrending market, almost similar to Evo USD. Can you imagine? This is an uptrending market, support and resistance level to see price is what ranging. Now there was a fake out, as you can see. So I'll be waiting for that breakout before I will enter. Waiting for that breakout to enter. So, but then if I want to enter this trade, if I wanted entering this trade, I will be looking out for what is it called? Looking out for say an engulfing candle here. I will have entered. Let's do some case study. I will have entered here, stop loss here, or probably stop loss here, and target the next low, which is here. So, but price was still retraced. Another engulfing candle, so I'll have had two entries. Can you imagine? Boom, boom, boom. TP taken. Now this is a not all engulfing candle are engulfing candle. We don't do this. This is not an engulfing candle. When I'm doing a video on engulfing candle per se, I will explain this aspect why this is not an engulfing candle. This is not an engulfing candle. This an engulfing candle, but it's not a valid engulfing candle. This is not a valid engulfing candle. So same thing goes for here. Take my TP here. So all the way boom up, space splash. This is not a valid engulfing candle. I'll tell you guys why in the next video. So, but this is a valid engulfing candle. So remember 50-50. I'm entering here, this is 50 pips. Stop loss, I'm targeting what? 50 pips. Probably here. 50 pips. So this is how you can trade a ranging market. You don't need to start entering everywhere. Just use your engulfing candles, cut it at the resistance or support level, and what trade in that direction of the market. So I believe you guys are understanding it. So that come again. If you have any questions, please hit the comment section. If you have any question, hit the comment section. Hit the comment section, please. If you have any question, hit the comment section. So another case study. Let's do another case study. I think we should have one more. Yeah, we have DXY as a case study. We have DXY as a case study. Now, DXY was trending a fake out. So in the trend, technically it's on a downtrending market, so price still faked out. So let's just do one. Now looking at the range, this thing was the range entirely, or the range itself. So we had two fake outs, which was by a week. Sure. But then this is a week, and we can see how, yeah, if you want to trade this thing, I just spotted something now. This is what an engulfing candle, right? Very long, very long one. So technically, if our stop loss is here, our TP will be definitely, this is like 200 pips or so. Stop loss. It's the reason why I'm laughing. This will have been what, 200 pips. So technically, the next breakout, this will have been a possible breakout. Yeah, and price will have come here. I will entered again, and I'm making more money. I'm making more money from this first trade here. But then this is very, very too big. So I'll have, since I know that this is a retracement, and probably this is an engulf candle, I'll be waiting for price to come low. So I'll be buying from here. This is an advanced trading technique actually. But if you want to learn why I'll have been entering from this level, I've already spot my first confluence through technical analysis that this thing is going to buy. So I'll just wait for it to come to my sustainable and affordable level, and I'll have been entering in at here. Probably still put my stop loss here, and boom, I'm moving up, because price definitely must go upward from here. This is a fake out, this is a breakout initially, and boom, price is ending up, coming back up to this area. As you can see, if I'm entering from here and I'm swinging it all the way here for this is a very, 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 very good sweet trade. So you can see forex trading is very, very sweet. I don't know if you guys are enjoying this session. Forex trading is very, very, very sweet. I don't know how many minutes we have done. This should be up for an hour. So yeah, that is that for the session. So we are done. All right, I believe you guys love the class. So we are absolutely done for this session. So in the next video, we'll be talking about support and resistance. technical analysis, support and resistance. I'll be explaining what support and resistance is. I'll be breaking it down for you to pivot levels. But I said there's going to be a special video for support and resistance levels. So you guys should be expectant. So if you love the video, if you love the session, remember to like, remember to subscribe, remember to comment, and remember to share. See you guys in the next lesson.